Alright, listen up. Whether you're new to investing or you've been watching the markets for a while, there's a term you'll hear tossed around by pros and everyday traders alike: the tactical buy. But what does it really mean, and why should you care? Let's break it down together. Let's demystify this buzzword. A tactical buy isn't just some fancy jargon. It's a powerful strategy that can help you make the most of short-term opportunities in the stock market. It's about being sharp, alert, and ready to act when the right moment comes along. So, what exactly is a tactical buy? Think of it as a smart, calculated move you make for a specific reason. You're not pledging your loyalty to a stock forever. Instead, you're jumping in for a short-term play, aiming to capture gains from a unique situation or event. It's all about spotting a catalyst. Maybe it's breaking news, a sudden shift in the market, or a company announcement. You position yourself to profit from that event, but you're always ready to move on when the opportunity fades. Picture this: you're a surfer, scanning the horizon for that perfect wave. When you see a monster wave forming, you don't hesitate. You paddle hard and catch it at just the right moment. That's what a tactical buy is all about: timing, preparation, and execution. And just like surfing, you're not out there to float around forever. You ride the wave to shore, enjoy the thrill, and then get ready for the next one. You're in, you're out, and you're always looking for the next opportunity. This strategy is tailor-made for people who do their homework, people who dig into research, analyze trends, and stay curious. If you're willing to put in the effort, tactical buys can be a powerful tool in your investing toolkit. You're on the lookout for triggers, like a company about to launch a groundbreaking product, or news of a big merger that could shake up the industry. These are the moments when tactical buyers get ready to strike. The goal? To buy the stock before the rest of the world catches on and the price takes off. It's about being ahead of the curve, making your move before the crowd rushes in. But here's the key: you have to stay nimble. Don't get emotionally attached to the stock. When the event passes or the price peaks, you're ready to sell and lock in your gains. A tactical buy is an educated bet on a specific upcoming event. It's not about luck, it's about preparation, timing, and having the courage to act when the moment is right. You're zeroing in on one company because you believe something big is about to happen, something that could send its stock soaring. You're ready to seize that moment. Now that you know the playbook, let's dive into a real-world example. Get your surfboard ready, because we're about to ride the massive wave created by Amazon. Let's see how a tactical buy can put you right in the action. Let's talk about the disruptor of all disruptors, Amazon. This is the company that changed how we shop, how we read, and even how we watch TV. But now, Amazon has its sights set on something even bigger: the way we buy our groceries. For years, Amazon has been trying to crack the grocery code. They've experimented, innovated, and invested billions. But the grocery world is a tough nut to crack. It's a business built on razor-thin margins, perishable goods, and deeply rooted shopping habits. They bought Whole Foods, launched Amazon Fresh, and rolled out cashierless technology. Yet despite all this, they haven't dominated groceries the way they've conquered books, electronics, or cloud computing. The grocery business is a massive pie, hundreds of billions of dollars in the US alone, and Amazon wants a much bigger slice. The stakes are enormous, and the competition is fierce. As of today, the whispers are getting louder. Industry insiders say Amazon is gearing up for a monumental push into groceries, one that could shake the entire industry to its core. This isn't just another experiment or a side project. This is an all-out assault, a full-scale campaign to become the dominant force in how we shop for food. Imagine walking into a store where technology is everywhere: digital price tags, smart carts, and checkout lines that vanish. Or picture a pricing strategy so aggressive, it forces every competitor to rethink their business model. Amazon is deploying its massive war chest, leveraging logistics, data, and delivery networks to conquer your kitchen and become the backbone of your weekly grocery run. When Amazon enters a market, it doesn't just compete, it rewrites the rules, forcing everyone else to adapt or get left behind. The grocery market is famously resistant to change, but Amazon has the firepower, the technology, and the patience to solve problems that have stumped others for decades. This isn't just a new competitor entering the fray, it's a heavyweight champion stepping into the ring, ready to go the distance. For smart, agile companies, this is the opportunity of a lifetime. The landscape is shifting, and those who can move fast and think big will find new ways to thrive. Amazon can't do it alone. They need partners, suppliers, logistics experts, and innovators to help build this new grocery ecosystem. That's where our tactical opportunity begins, right at the intersection of disruption and innovation, where the future of grocery is being written today. When Amazon makes a splash, it sends waves crashing everywhere. Amazon's grocery plan is that splash. The real money is often made on companies lifted by Amazon's waves. These are the unsung heroes, the critical partners behind the scenes. Running a nationwide grocery operation requires a specialized network. Amazon needs everything from farmers to packaging companies. Most importantly, they need a robust supply chain. This creates a fantastic opportunity for investors. Instead of betting on the giant, find the smaller companies set to benefit. We're looking for the company selling the shovels in Amazon's grocery gold rush. The brokerage firm has identified a key player in food distribution poised to partner with Amazon. The moment you've been waiting for, which company is the tactical buy? The company is US Foods Holding Corp., ticker symbol USFD. US Foods is a powerhouse in food distribution, not a grocery store. They are the middlemen, buying massive quantities of food and delivering it to customers. Think of US Foods as the circulatory system for the food industry. They have the infrastructure and scale that's hard to replicate. US Foods has the picks and shovels Amazon needs for its grocery ambition. As Amazon blurs the line between food service and grocery, US Foods becomes a hidden gem. Amazon needs a partner for complex logistics, and US Foods is the perfect fit. This potential partnership is the catalyst that makes USFD a tactical powerhouse. Let's get to know US Foods better. US Foods is a logistics and supply chain masterpiece. They operate over 70 distribution centers across the US. These facilities store everything from frozen fish to fresh lettuce. US Foods offers a catalog of over 400,000 products. They manage a fleet of 6,500 trucks, delivering to 250,000 locations. They are experts in last-mile food logistics. Amazon's ambition is bigger than delivering cereal. It's about fresh food and prepared meals. US Foods has the supplier relationships and infrastructure Amazon needs. A partnership with Amazon would be transformative for US Foods. We've identified US Foods, ticker USFD, as the tactical buy. This isn't just another stock pick. It's a strategic move that has caught the attention of some of the sharpest minds on Wall Street. US Foods is at the center of a potential transformation, and the market is just beginning to wake up to the opportunity. Here's why a major Wall Street brokerage is excited about this stock. Their analysts have pored over the numbers, the trends, and the competitive landscape, and what they've found is a company on the verge of a breakout. This isn't hype, it's a thesis built on data, strategy, and timing. First, the volume tsunami. Imagine the scale of an Amazon partnership. Billions of dollars in new revenue could flow into US Foods. The sheer volume of orders Amazon generates would be a game changer, instantly boosting US Foods' top line and giving them a massive new growth engine. Second, infrastructure in a box. US Foods already has the logistics, the distribution centers, and the delivery network that Amazon needs. By plugging into US Foods' existing infrastructure, Amazon could scale its food delivery ambitions overnight, while US Foods cements itself as an indispensable partner. Third, margin expansion. With Amazon's massive order volume, US Foods can operate at higher efficiency, driving down costs and expanding profit margins. This isn't just about more sales, it's about better, more profitable sales that can transform the company's bottom line. Finally, the re-rating. A partnership of this scale would force the market to re-evaluate US Foods entirely. Investors would see the company in a new light, potentially driving the stock to new highs as expectations reset. This four-pronged argument forms a powerful case. Each pillar, volume, infrastructure, margins, and market perception, reinforces the others, creating a compelling narrative that few stocks can match right now. Amazon is actively seeking partners to expand its reach, and US Foods is uniquely positioned to deliver. If this partnership materializes, it could reshape the competitive landscape and set off a wave of innovation in food distribution. The brokerage isn't betting on a rumor, they're betting on a sound strategy, backed by research and a clear understanding of both companies' strengths. This is a calculated move, not a speculative gamble. They believe the market hasn't connected these dots yet. Most investors are still focused on the day-to-day headlines, missing the bigger picture that's unfolding behind the scenes. This is the kind of clear, compelling story that can move a stock. When the narrative is this strong and the fundamentals line up, the market often responds in dramatic fashion. It's a logical chain of events leading to a tactical buy. Each step builds on the last, creating momentum that could propel U.S. foods to the next level. The window of opportunity is open, but it won't stay open forever. For investors who act now, this could be the moment that defines their year. A great story is one thing, but we need to look at the numbers. Let's check U.S. Foods market capitalization, profitability, and debt. U.S. Foods has a market cap of around $12 billion. It's a mid-cap player, stable yet impactful. A major contract could significantly impact its revenue and stock price. U.S. Foods is profitable with a reasonable P/E ratio. The tactical buy is based on future earnings from the Amazon catalyst. U.S. Foods has significant debt, but it's manageable. The potential Amazon deal could help pay down debt faster. This strengthens its financial position. The numbers back up the tactical buy. Before you get too excited, let's talk about the risks. The biggest risk is catalyst risk. What if the Amazon deal doesn't happen? If Amazon partners with a competitor, the stock might not rise. Market risk. A recession or global event could impact all stocks. Company-specific risk: rising interest rates could affect U.S. Foods debt. Execution risk. Can U.S. Foods handle the increased volume smoothly? Competition risk: other distributors are also vying for Amazon's business. Investing without understanding risks is gambling. Be prepared for the worst to separate pros from amateurs. Never forget you're investing in a real business with challenges. We've laid it all out. What's the verdict on U.S. Foods, ticker USFD? Is this a quick tactical trade or a longer-term hold? My verdict: U.S. Foods is a compelling tactical buy with long-term potential. The primary reason to buy is the potential Amazon partnership. If the news hits, expect a significant stock pop. For traders, that might be the time to take profits. However, there's a case for holding on. The Amazon partnership could fundamentally change the business. Increased revenue and improved margins could set U.S. Foods on a growth trajectory. I would initiate a position, treating it as a tactical buy. If the Amazon news breaks, sell a portion to lock in profits. Hold the rest for potential long-term growth. What will you do?